Greetings, market rebels. Welcome to this week's macro measure. It is Sunday, November 26, 2023. It's just a little bit in front of 11 a.m. here on the East Coast. And I'm Wayne. I'm going to get things moving. I can't shake this cold that's been getting me now for 10 or 11 days. Here's our trusty disclaimer. And here is our trusty intellectual property rights notice. And then here is this week's stream, which I'll leave up there if you want to just pause and take a snapshot. But yeah, I'm trying to do the best I can, just fighting through this whole thing. Just keeps lingering on, unfortunately. And so I've got so many things I've got to try to get to, including not doing hopefully too much. But let's get moving on things now that we've flashed that. I was going to reposition a little bit and then get myself out of this display mode, hopefully, and then I can bring this stuff up here. So what I think I might do first is just to do a quick, kind of like a quick summary and then tabs check. Let me just get us into, let me do the screen 3 for now. So I'm starting out just showing the grid that we talked about in sector situation, and each and every week. And I'm just really wanted to bring this up that if you look at these sectors more closely, but hopefully you can just make it out. Not every one of them, but just many of them are really at an extended state. So if I'm looking across the market quickly, I can see that pretty clearly that financials, for example, we'll just enlarge that one. This is just a really extended state. So the same things really there in materials and also in industrials. They did run transports, pretty well. They're not as extended, nor are other ones. So I'll cover this a little bit more, but you can see healthcare's becoming extended. Certainly XLK, XLC are already extended. We've been following those. And the reason I'm bringing this up in macro measure is just because I think it's very clear at this point that the market is in an extended state. I'll show that, and then we'll get into like going point by point. So let me switch my share to a different screen, and this should be screen number 4, and I'll go through these tabs here, and then we'll get back to the point by point in the charts. But it's not letting me share that one, or is it? Screen 4, share. It should be now. There it goes. So I'm going to start with a tabs check, but basically, right, to summarize things, last week was a holiday week. We thought pretty much waiting to see what NVIDIA does and then see if that sets the tone for the week and drives the market. And the outcome was kind of a little bit of a disappointment. There wasn't really as much movement potentially as I would have thought. And basically it played out much like a holiday week. So that's really just a quick summary of last week. As far as this outcome, they did, as I just noted, they brought a lot of sectors home. I mean, along for the ride, put it that way. And they held the market again during a holiday week where you didn't really give much back. So to me, that's, again, second time I've mentioned it, maybe in a row here, but deft handling by the gang removed some of the extreme overboughtness, kept the bullish complexion in place. Very little give back, corrective consolidation still left in the dust because we haven't even gotten past, and it had it anywhere back towards them. And just remember, as a reminder, right, this year's the best year of the 4-year presidential cycle, and next year is the second best year. And usually there's a pretty strong transition from one to the other, which we should be able to see right about here. So I'll jump to that tab here, and I'll make sure this is showing properly. Excuse me. So you could see, right, that usually November provides stability after what September and October have done in terms of volatility. And then you catch a bid late in Nov, kind of, around where we are now. And then they kind of push it for the most part in virtually every year through the end of the year. But we've had this really strong performance in November in the market. And so is it possible, right? That's one of our points this week. Is it possible they drew a lot of that forward, right? And so I think the combination of factors with This being the other one I wanted to show. No, that not being the other one I wanted to show. This being the other one I wanted to show quickly. I think this is what we have to keep in mind right now, that we've gotten up to a 45.3 bullish reading. It's the highest bullish reading since August 2nd. And so if you remember what happened just after the top got put in in late July in the market, right? That's when we started to really pull back. And you can even see that the bearish reading is also, I think, the most bearish reading that we've had since the same date. So I think this has gotten a little bit overdone at this point. You're in greed. we did say last week, excuse me, that you had longer to go potentially to get into extreme greed. There's no reason that you have to get into extreme greed. There's no rule that says you must do that, but that's what we were noting. So it's trended more towards getting towards extreme greed, but we're not quite there yet. Rates are all down though, right? So if there were a pullback, unless rates start reversing, you can look at whatever you want, the 20-year, 30-year, 5-year, everything's pulled back significantly. The dollar's pulled back. VIX, as we thought could happen, did actually pull back and make a new, I think, 2023 low, I think potentially on Friday. So these are pulling back. The dollar's pulling back. The VIX pulled back. VIX is really low now, and things are really set to just sit still in about 2 to 3 weeks. We're not really expecting much out of the Fed. If you kind of click your way through the Fed expectations, they stay elevated a little bit until you really get out towards March, and then you start to see where the chances of being where we are now or lower start to look a little bit more strong than here or higher, right? And so by May, it shifts a little bit more so that they're thinking rates come down. Now, that means, right, that the fourth year, which we just talked about, could sort of thrive on this expectation that rates are going to start coming down. And they don't really have to face the devil, so to speak, until December 13th. So that makes it really interesting. I don't know if there's going to be a correction and then a rally into the Fed, or if there's going to be they sustain this rally and they then correct with the Fed. I would tend to think they're going to have to correct sooner than the Fed and then rally into it. I think that's what they've been doing a lot of the time. So I do think that we're set up for more of a pullback than a continuation. But let's also note that we could start out, let me pull this chart over here. We could start out in a situation where maybe they take some news from the shopping weekend, right? Black Friday and the just kind of getting this cold's in my way. The Black Friday and the Cyber Monday and the whole weekend, and they use that to sort of pull off the propulsion and push this up towards the highs and the Qs and so on and so forth. You get another few percent out of it, it gets really overbought, and then the plug gets pulled. So that's another, we just don't know, right? It's all about the path that it takes, right? And that's why we're all about just reacting, right? Because even though it might be late in the game, if they decide to come after things like gangbusters and hang their hat on the fact that maybe sales were better than expected or whatever, I couldn't say that. I mean, I've seen reports online this weekend that things were mixed. But it really, to me, like if it's mixed, that's a win for the bulls, because when you're acting bullishly, anything that's not horrendous is a win for bulls typically. So it's not really a fair fight that way, but that never has been, I guess. But anyway, I've got lines which I'll cover, but that's one thing that crossed my mind. They could put a little overbought, like really get us into extreme overbought quickly this week, have their pullback, and for a little while after that they really desperately need, and then kind of goose into the Fed and through the Fed and then into the end of the year, maybe. So we'll see, right? But I'll get back to the levels, but those are just some of the thoughts I wanted to share. So the current assessment, we just kind of did the tabs check. Let's just get back to the tabs briefly so I can get you. That is not it. Let me just see. where my tabs are. Just hold on 1 second here. Stop the share. I gotta find these tabs. I thought I had those down there, but where do they have here? That is that's the watch tool right there. Yeah, this is strange that they're giving me this trouble again. It's like it disappears from where I had it. It puts it in a different order. Part of it's my fault, but undo that. Well, enough of that. I think I'm going to have to go to one last attempt here. Otherwise, I'm done. It seems like it just keeps dumping me. Now, there it is. Sorry about that, everybody. We got to get 4 share. Okay, so I'll go through this just methodically. So we did cover those. You saw the survey results, which to me, this is where it's now really kind of telling you that this is an aging move and you got to be ready, even more ready. We know where we are there. If you look at some of the things like bouncing back, right, it's been impressive in the shorties. So the 20-day percentage of stocks above the 20 days gotten up there too. Again, doesn't mean instantly sell, but remember, when you get this extreme, especially with this quick flip around that we've had, you tend to get corrective activity. So I think that's closer, right? To say that it happens on Monday, I'm not prepared to do that. I don't know what the weekend news, I don't know what overnight news, Asia news, I don't know what all that will bring. But here's your MMFI, the percentage of stocks above the 50. So with that in mind, you got to say, well, okay, we're getting there on that too. Now, of course, the 200s was further away with all the sort of weak performance we saw out of so many stocks. So they had a longer run to get back to the 200, and they're not really all there yet. So that's not really overdone. So in a way, it sort of suggests to me that what we're discussing here, which is, do you get a pullback soon, which is becoming due or maybe overdue soon, but then you still have room to keep going because you really haven't done the whole 200-day jam job thing yet, which is a possibility. So just something to keep in mind. I'm just going to finish on this. Just want to remind everyone, we haven't covered this in a few weeks, but I'm going to leave this here. This is the key part right here. So this was the chief operating officer for Ritholtz Wealth Management. Maggiuli has graphed the performance of S&P 1 year after each of the 29 Fed rate cuts from 94 to March 2020 and found that returns held steady in the immediate aftermath, but after a year were down approximately 10%. So that's the interesting part of this, is that when the Fed starts to realize that they need to start cutting, that can really actually hurt the market over the next year. Seems like it does. So that's the interesting part. So in other words, it's kind of in a strange way, the fact that rates are staying up might be helping them out, helping bulls out. So just keep that in mind. So let's get back to the charts. I will switch to a different chart view. We'll go back to 3 and I'll close this down. Oh no, Thinkorswim's doing something funky now. Boy, this is everything's after me. So we might have to do this quickly, but what I wanted to show this week really is not that complicated anyway. So I'll just make sure I cover my points if I can before things crash. But I think what you have to realize is, right, that you left this is the spiders we're discussing here on the daily. We have to acknowledge that we left I'd rather get this simpler chart to read here. We left that consolidation that we've got the lines drawn around. Maybe I'll just make this was kind of highlighted to be orange for a reason. So it drew everyone's attention when we discussed it before the breakout. But if you look at it now, I'll make it white. There you go. You should be able to see that better. And so there's your consolidation, that corrective action we had. And then they jammed through that, right? So this is really the start of a new leg, right, out of a correction higher, right, potentially. And that's still up for debate, I think. I'm not ready to embrace that, but they jumped right on our former sort of support line right above it. I thought it would have trouble getting if it got there and then maybe back off a little and then maybe try to go, but they just went right through it like butter. And so now they're really close to this high. I mean, slightly lower highs that are of this magnitude, right? Kind of this visual magnitude, they do happen. But I think, right, if they do get good weekend information that they can run with, there's a chance they try to pull off a nice Monday and maybe a nice start to Tuesday. And if you're going to get anything, you could get your turnaround Tuesday if they finally just start to sell. Now, I don't know what would trigger that other than some people just say, look, this has gotten overdone, and there's just most people have bought. They have flipped a lot of people around that were short. I still think there's probably people fighting this, to be honest. I'm not going to understand why. In a way, I don't like fighting against the trend though myself, but I'm just saying that I can understand why some people that are longer term in their positioning and did react quickly, like short-term traders, might have a problem right now. But so there are some of those people out there, but I think a lot of people have also bought at the same time. And so you can see I've got this support line drawn in here. And so who knows where it would be if they come down and touch it. But I think you have to look at this, probably that 450, that 455-ish range, up in here, 454, 455 is your first place where you can start to think that maybe this is going to crack. But remember, you're going to have a lot of company. Everyone can see that there's an extreme vertical movement here, right? And this has been one of the fastest, not unprecedented, but one of the fastest turnarounds from sold to overbought in the last 50 years. I think we noted that last week. So that's relatively rare. Once every 10 years, you get this kind of a swift turnaround of that magnitude. So just keep that in mind. So I think a lot of that's shaping up that you're getting close to a correction. You've got to be ready for that correction. Let me get my stuff flashed so I can make sure we cover everything. It's not letting me do that for some reason. I've got to move it over here. Okay, so let me get to this week's stream. There it is. So there's the look there. I mean, I would go with it. I think you've got to know where you are. And I think if you're a reasonable person and you're objective, you could say that, look, this is pretty stratospheric at this point. And could get more stratospheric, but a lot of the easier money, the easy part of the move is already transpired. And so you've got to realize that. And if it does arrive up here towards that upper Bollinger or this former high, I think you have to realize that it's probably spent a lot of fuel and energy to get there. And probably under most circumstances, I would say 90% of the time, it can't stay up there and hold without backing up a little bit. And with this kind of a move, probably even more, but I'm just kind of ballparking it. So I think you've got to be careful if we do get up there. I would be Mr. Aggressive Roller or Miss Aggressive Roller or what have you on that, because it's just, you're playing, in my book, you're playing against the odds, and it's kind of like the old pennies in front of the steamroller at that point. If you ask me, you just really got to be ready to pull that parachute and get out quickly. And you have a similar thing here, right? So the spiders could effectively, right, if they come up with all this wonderful information that everyone's spending on credit, it makes everything look good again in the short run. Not really a great long run strategy, but the spiders would really just be following the cues if they did that, right, to break out. You can see I've got a line here. So once again, if you want to keep playing it, I understand, right? This momentum has been here. It's been remarkable momentum. I would continue to play it myself, but at the same time, I've got an eye towards the exit, right when I get into the trade, because you've got to keep an eye on what's going on the news, for sure, right? Does a news story impact maybe the dollar and the yields turn around, something you don't want to see right now? That could start to suggest to people, hey, look, there's going to be a reversal in these guys. It's time to cash out for now. And then I think they regroup, barring any dramatic information. I think they regroup after we do have some sort of a pullback, and they start to try to goose again. That would be my expectation as of right now, and without the benefit of future news to factor in. But the diamonds, right? There's a similar support line that I added, the short-term support. But if I add another one, you'd have to really do this if you wanted to get the real, where real support is. This is what I like to do anyway. And if that doesn't hold, you're basically looking at Thursday's close. So if you wanted to say 352.56, cracking below there, you'll probably find support here. The 10 SMA will come up there in the diamonds, but they both, the diamonds and spiders, have a little bit of room clearly to catch up and do the QQQ thing. But a lot of these things, as you can see, if I give you a little more, just not really trying to crunch the history, but just to show how vertical that is. It's almost like an 75, 80 degree sort of slope. And you just don't get that type of stuff to sustain for very long without some sort of a breather. So I think they're, like I say, I think they're getting close. IWM, it's a similar story, but different in this case, because this has been such a laggard, such an underperformer. And I did see some stats where there's I think 40% of the companies in the IWM are losing money. They're not are they not, are there, it's not a case of their profits are going down. It's that they're actually losing money. So again, it doesn't really matter in the market because these are lower weights. And that's what we talked about last week about how they keep things going, even if, and how you might have a stealth bear market that really happened, but you'll never see it in the major indices because of the way they've got everything set up. But this is clearly, right, triangulating, as I like to say, since it made this move. And you've got this breakout level at 179.71. So basically at the highs, the recent highs, other than this one. And you've just got to get above the 100. You get above the 100 at 180.150. That's only one good day's push. This could easily do that. And now they're above all the SMAs, right? And so then they're finally, this small cap index ETF is, that is finally joining the party. And there's a lot of catch-up potential there. Now, I personally don't think that I think this is more of a bold sort of bum's rush approach that people are taking of it. That's fine for short-term trading. Who cares if it's, who cares if it's legitimate? You're not planning to wait around and figure out if they do push this thing higher, if that was legitimate and these companies were really doing better. I mean, we're just focused on the short term. So I would have no problem. I do think, right, it would be the second time trying to get through the 150, the 200, and the 100 respectively. If it did get up there, if this tick is right, and I think it is. So if it is right, it'll be the second time there. It might not get through there, right? Especially if what I'm saying early week, they push a little further, maybe with some good news that they try to rustle up from retail sales, consumers healthy, all the usual stuff. That gets up and it pulls back a little bit. The support line maybe provides support, or maybe it dovetails with the SMAs that are waiting for it. It holds above those or near there, and then it can go. That's a possibility. So I think it's very clear, right, to me, like if you want to fight against this, that's fine. There's nothing wrong with that either, right? As long as you're going to be disciplined, but I wouldn't let it, if you get through here, you got to be careful, I think, at that point, because if they can keep going a little bit further, there could be a big move. So they could get one final sort of, let's jam this thing up type of maneuvers. And I did mention the VIX, so I'll cover that as well. But we did say, I think, that this kind of a holiday week that we just had could bring about a low level in the VIX. I didn't know it would get, to there at that point. But if they keep this going, right, you're probably going to see an 11 handle. When we talked about this, I'm pretty sure that we thought maybe this could do something like this. It turned out that it did get to a new low. And, I didn't have it in my mind that we'd be going out for the whole weekend on a low after Thanksgiving, but that's where it got to. And you could see that it's down there. Now you have to go back many years, right? So that should sort of tell you in a way that this is concerning, right? Because you don't really see the VIX getting this low unless you go back several years to get to these lower lows back in say 19 or maybe 20. But the point is, it's several years and this thing's really smoked. And you stop and think about it. Now, I know that people will say the VIX is broke, it doesn't work anymore. Maybe there's some truth to that. I don't know. I don't study it enough to really be able to say. I don't hang on it like a lot of people do. I think it's worth keeping an eye on. I don't hang on it. I've never really hung on it completely and thought it was be all end all for telling me what to do, but I do still think it's worth a watch. But when you think about all the risks out there, and I still think there's global slowing, there's problems in a lot of places, there's a lot of political upheaval, there's potential war, there's all this stuff out there, and this thing is really making multi-year lows. It's just remarkable, right? But probably, right, you stocks usually do better when the dollar's falling, and if the dollar's falling, they're usually moving them up, and profits are usually looking better for them. They can sell more goods, cheaper dollar, blah blah blah, and so abroad, and then so with that, there's this desire to buy and drive things higher. So just keep that in mind. But I mean, the dollar yields, everything really has worked exactly like you would want it to. I think from a technical perspective, if you're a bull, you've had this nice dollar and yields retreat, and that's brought the VIX down. And we were saying like this is not a good looking chart, and it hasn't been a good looking chart. Now it's at a critical spot, I'd say, because if it starts to really get away from the 200 here on the dollar, it certainly could visit much lower levels. Excuse me. And I'll do a quick check on yields. But a couple more things, and then I'm probably going to have to try to wrap up here. But yeah, there's your yields, right? We said we wouldn't be surprised a couple of weeks ago if it did visit when we were up in here, but try to get back up towards the 20, maybe fill the gap or visit the 100. It was just a matter of which way is it going to go. And the trend has just been down, and it stuck with the trend. It definitely got down to that 100, like we were thinking maybe it could on that. So right now, you got to wait and see. Can it bounce out of this beyond that resistance line that it got up there, which you could even just use the 15 SMA in red, which is just a little higher. And if it can't do that, right, then it probably retests the 100, and you see what happens there, just going sort of iteratively with it. Let me think. Oh yeah, I know I wanted to take a look at two things. So one thing I would say is interesting, right, is that there's potential for maybe the most important stock of the moment, or at least one of them, and that's Nvidia, to really crack back down to the 20 there in blue. It's the way that it closed. If they're going to say sort of like take profits, all the news is out for now. I looked at history too a little bit, and I saw some information, I think somewhere on formerly Twitter, and normally this is not a great month for this stock as well. So it wouldn't be out of the question for that to struggle a little more. That'll make it hard for the Mag 7 not having that. And certainly if you look, well, I should look at semis too. But if you look at semis, they have a similar look, right? Which you would expect. So they're right on support. They could crack, give some back, start filling, at least fill this gap back here, kind of near that 15 in red. It's only 2 to 3% lower, but it's just something worth noting that could certainly do that. Maybe more, we'll see. But the other leadership areas also, I think, look a little bit vulnerable, right? Where they're very close to basically, right, they're a victim of their own success because they've gone up without really stair-stepping their way up. Any little crack could start opening the door towards gap closures. So these leadership areas, XLC, XLK, they all look to me to be a little vulnerable. On the flip side, if they get things going on energy, that would be a good sign in the sense that this has been sort of bottoming here. We did see some paper here, just like we did see sort of some metals paper. It's a little bit coming in, not very forceful yet, but it's a sign. I think the technicals are trying to improve. So it would probably be taken as a good thing in a way. Maybe that would show a little bit more economic resilience than I see, at least, or some people that see it my way would say, maybe things aren't as bad because there's demand for energy, but it hasn't been that way. So it's sort of been accompanying this market rally and helping, maybe because it's bringing gas prices down, significantly with the way the futures are acting. The other thing that's worth noting is the final thing I'll cover, which is that we'll do Apple, Amazon, we'll do Google, Meta, Microsoft, NVIDIA, and Tesla. And here's our Mag 7. And we've been charting this a little bit, and it too looks that way. And that they have had a great run, right? So you can see I've got a line in here. I'll highlight that and make it blue. And that one it's cracked right there below that right now. So you're really close, I think, to probably really close on Friday's low. That could definitely give a little back. You could maybe find SMA support. If you fall below that rising 10 in white that you're on right now, you could get to the 15, maybe come back to the 20. Clearly, the 20-day there in light blue makes a lot of sense, because that would put it right near another former resistance line that's now a support line potentially for me. So I think that would make a lot of sense to come back to about 18, let's call it 1840 at that point, if that were to happen. So again, going a little bit below there, stopping and reversing a little higher than that. I'm just throwing a number out because I think I've seen so much of both over my careers that I think trying to get super precise can be hard to do. It's very time consuming, and you've got to do a lot of different things. And unfortunately, we don't have the time to do that. So that we have to do let's get something that works, get in the ballpark, make that middle 80% of the money, hopefully, or at least shoot for it, and then go from there. But I'm not saying that I guarantee, hey, this is falling, but as of right now, this looks a little bit more inclined to want to go down. Now, there could be a story that buoys things that I'm unaware of, but I'm just saying, I think right now you've got to be more concerned about that going down. So keep an eye on that package. Maybe they're another victim of their own success. Here's your cues again to kind of close things out. Cues, I've got this line right there, and you can pretty much use the 10-day or whatever you want. It's close by 385.73, but it just wouldn't be crazy to have maybe a little more success again, like I say, on over the weekend news. And then if it cracks below support afterwards and reverses, then that might be your sign that the gang's decided they're going to take some profits for now and look to work the calendar, maybe the other ways we discussed. So let's just make sure we cover some of our points. The breadth continues to get better. We just showed things where a lot of sectors came in for the ride. I wrote that we probably need a pullback really to get a re-squeeze into 24. That will be my overwhelming sort of confident comment, which is I would find it very difficult after November for them to not stop and basically deliver another November type performance in December without having some sort of a pullback. Could happen. I kind of would stun me. I mean, I just don't think I've seen, in the face of everything that's out there and where valuations are and where rates are and all that, I don't think I've seen something like that. I have seen it at other times. Sure, back in the late 90s and in NASDAQ, things were even maybe more incredible. But I don't think they can do that under these conditions is what I'm getting at. But again, I wouldn't rule it out. You never know. I just honestly feel like that's very much a long shot. So I think they need to pull back to re-squeeze. The wall of worry is still growing. Note, right, that all those areas remain leaders that we just talked about, and the breadth can't be argued against, but it is aging, right? So this move it's brought a lot along. I feel though that it's aging, and I think for that reason you have to be really concerned and trade it that way. The third year into the fourth year has been worthy of our attention. So we followed the calendar this year pretty much nearly all year, and it's been good. So the fourth year is supposed to start out strong, as we saw, and go from there. But that's in the face of slowing right now. I think you're seeing slowing around the world. So I mean, maybe we could do it on our own. Maybe it won't matter just because of the Mag 7 if they continue to perform. Maybe that's it. Bottom lining it, let's see if I've got anything I can really highlight there. Just remember, right, that I'm worried a little bit that the bulls are ahead of themselves. That sentiment skew we saw with really getting very bullish and very bearish. I mean, sorry, not very bearish versus very bullish. That's the kind of like the most skewed we've seen since very early August. So keep that in mind, because that mattered, it seems, last time. We then started getting pretty serious corrective activity for the next few months. This week's important considerations are the same as last week, with the addition this week of, you still can't assume that it's over. The bulls have won and it's over. This still could be a protracted trap. So they're guessing again, right, that the Fed is done and that rates are going to be coming down sooner than later. If that proves premature and economic deterioration continues to develop the way at least I see it, apparently a lot of these news people don't see a lot of these other reports. They only see good ones, but I see a lot of concerning things out there. And I still see that oil, even though it's maybe a little bit nicer technically than it was a few weeks ago, and we have a little bit of paper appearing in there in UOA, that's still struggling. So I'm asking, where's this global demand at? And the other question would be, does it matter if you have global demand, if they're just going to Mag 7 everything and that's it? So I think it's going to be hard for them to have another full leg with only the Mag 7. So I do think that the global situation improving would be of great help. I do think oil actually getting a little bit of a bid and not plummeting would actually be a good sign that maybe things are not as bad. But I think with oil under pressure, it does help inflation. But if you're already convinced that inflation's done, which they seem to be, and that the Fed is closer to cutting, which really apparently they shouldn't really want, then why do you care about, oil demand why do you care about oil prices going lower at that point? I think you probably say, okay, well, the Fed's cutting and, energies always can be volatile. So that's really not the inflation we're worried about. And you would start to think of oil catching a bid and stabilizing as being a positive thing. But I'm, again, so the real bottom line is Mag 7 looks a little vulnerable at the moment. So does SMH, XLK, XLC. These are the leadership areas. They did pull a lot of other things along for the ride again last week. Those are also sort of technically extended. I do think there could be an early week bump, maybe again from weekend positive comments and developments. And then from there, I still think you are likely closer to having some sort of a pullback rather than continuing to go. And I think, again, for them, even if you're a bull, you probably should welcome like a nice 3 or 4% pullback here because of these indices, because all that would do would be to close gaps, remove the overboughtness, and set you up for fun times into the Fed and then through the holiday season into the new year. So it almost fits you like a glove. They've done everything that's fit them like a glove this year, pretty much. So maybe they will continue to do the same thing. So I think on that note, I'm going to have to end it and get on to sector situation, which will be brief this week. And yeah, so I want to thank everyone for tuning in. I'm sorry about the pauses and all this stuff, but it's just been really congested. It's just been going on for too long. It's one thing when it's like a week long, but I'm getting into like where it'll be 2 weeks coming up in a few days. I'm kind of tired of this stuff, to be honest. Not the end of the world, but it just gets in your way. You know how it is. So everyone have a great weekend, and I hope you had a great holiday and a safe holiday. And I hope that something I showed or tried to help out with this week helps you out during the trading this week or some week in the future. And again, thanks for tuning in. Everyone, take care.